that leads me into cash flow. So we've got our job budget here. We've shown that we had our little overrun with electrical, which has affected our profit. If we now go to our project management, we can see that we've got our job starting in July here. So if we start to move this job around, that's also affecting our cash flow. If we go to job financials and cash flow, you can see here that we've got some predicted dates here. October, we're looking at invoicing out $96,000. So if we go to our client invoices here, we can see that in October, that would be our footings poured. We're going to issue it on the 17th of the 9th, but we're predicting to receive the money in October. So if we go to this particular schedule, we can see that this is linked to the schedule item footings and slab. So let's say we had a delay on our footings and slab, or we're going to do it quicker, and we're going to predict that that money is going to be in September now. All we have to do, or your project managers have to do, if I move footings and slab now back into August, say, and we go back up into our cash flow forecast, you'll be able to see now that that has brought that revenue back into September. So we were going to issue it in August and it's brought the revenues to September. So it just means your project managers are moving dates around here, changing timelines, paying bills with your accounts team. It will update your cash flow forecast instantly. So if I go back to the cash flow as well, it's also predicting the bills from that particular scenario. So if we go to our cash flow setup, we go to footings and site works. Let's link up that the foundation and site works category was actually after footings and slab, 100%. We're going to expect 100% of that cost category after that schedule item. So if I now go back to the cash flow, you can see that that has affected that we are predicting that bill to be paid in October. Now that is due to our cash flow setup. So if we go to our cash flow setup here, you'll be able to see that our payment terms on our bills is actually 60 days. So I'll change that to 7 days, and we go back to our job financials, and you can see that that bill is now predicted to be paid in August. Again, if we move that schedule item out, it's again reforecasting when we're expecting that revenue and bill to come in. So let's just say on that slab there, we had a big windfall. You can see that the bill's predicted at $68,000 in September. We go to the budget, we go to the cost category foundations, and let's say we're actually going to get a free slab. We got really lucky with our concrete and we close that category off. So we're not expecting to spend any money on it. Go back to our cash flow, instantly that has updated that bill to only be $11,000 now. So there's obviously another category linked to that period. So you can see how instant it is. As soon as you change a day, update a budget, pay a bill, it instantly updates your cash flow forecast. Now that's just on a job level. If you go to finance, I'll go into the global cash flow. You can see here in September and October, or let's say October, we predicted to have a bank balance of $1 million at the start of October. Now, if I go back to that job and we bring this whole job back, it's actually going to change how we're forecasting our cash in bank instantly, globally. So if we now go to job financials, finance, cash flow, you can see now at the end of October, we're issuing $928,000 in the bank. So what the system's doing is, if we click on income here, it's got all of our jobs that are in the system. It's showing us month on month what we're going to receive project income. And then expenses, it's showing month on month the bills that are going to come in per project. You can set up your overheads here as well, so that this cash forecast is actually a true reflection of your overheads being combined, your income on all your projects, and your expenses on all your projects, summarizing into one neat and tidy cash flow forecast. And you can see that out a couple of years in advance. If you were to plug a number into your expenses here, add a new wage or a new expense to see, well, based on my current projects, if I employ this person, what position am I going to be in 12 months? Boom, you can do it in Jack within a minute. Previously, you probably have to have a 2-hour conversation with your accountant, pay a couple of $1,000s, and they'll give you an around-about answer. Jack will give you the exact figure of where you're going to be in 12 months. If the jobs have got schedules, they've got budgets, you pay bills and you issue client invoices, which every builder in the world generally does, then you're going to have an accurate cash flow forecast that's up to date as you move, as you change anything in the system.